Hi guys and welcome to my YouTube channel. My name is Zondazondarasura, and in today's video I'll be doing a book review of a book called Make Your Money Work for You by Anthea Gadner. So I got this book from Easy Equity earlier this year, and I did a video unwrapping the gifts that I got from Easy Equity, and I mentioned that when I'm done reading this book I will do a book review, and this is me just trying to keep my promises. So yeah, I'll be doing a book review. Okay, so the title of the book is Catchy, Make Your Money Work for You. And I'm sure we are at a day and age where everyone is just trying to make their money work for them, right? So yes, I want to confirm that the title of the book does match the content in this book. So yeah, you should go and read it. And as you read this book, you will find the different investment options that are out there, as well as the asset classes that are out there that you can use to build your portfolio. So she covers from the bank, shares, retirement annuity, and the different risks involved in investments. So it's pretty a good book. So a little bit about the author, Anthea Gadner. It says here in the book that she is the founder and a managing partner of Cartesian Capital, a South African asset management business. She is a popular financial commentator with slots on Classic 1027, CNBC Africa, and Cliff Central. So she is very experienced, and she does mention that in the book. And I think her experience does really come in handy. You can see by the way she brings perception. She clarifies the different perceptions that we have towards money in the way she goes in depth in some of the concepts that she addresses in the book, right? So right in the beginning of the book, she encourages everyone to start investing now. So she says whether you've got 500,000, 50,000, 5,000 or 500, there is no excuse to not start investing as soon as possible. So also she does encourage young people as well to start now, to start as young as possible, because then you have time on your side and you also have compound interest to benefit from. So for time, if you are to invest in a risky investment, you have time for your investment to recover in case something doesn't go well. And also for compound interest, your money can earn interest, and your interest can earn interest as well, right? So this book has 13 chapters. I'm just gonna quickly read them so that you have an idea on what this book is about, and then we can get into the book itself. So it is an introductory page and 13 chapters, which are namely why not simply spend it all, setting your goals, clever in your 30s and relaxed in your 60s, your friend the stock market, the share to property, taking a closer look at asset classes, who is who in the investment zoo, making your money work for you, the eighth wonder of the world, compound interest, understanding risk, designing your portfolio, the rise of a robo-advisor, how to avoid fraud and investment scams, putting the whole picture together. So those are the chapters that are in this book, and really I think all of them they're really good, and the more you read, the more you understand. So they related, right? The other one makes it easier for you to understand the next. So it's one of those books that, if it's your first time reading it, you need to read the whole book, and you can always go back. If there is any financial decision that you need to make, you can always go back and reference to the part which is more relevant to you. So one of the things that is worth mentioning in this book is the summary pages that she has after each and every chapter. So she summarizes the key points, so that you don't really miss what the intention of the chapter is. She also have this blogs where she starts introducing a financial concept, and then she gives you a definition of what that concept means, right? So that you don't have to Google. So it just saves your time, and it just simplifies it and make you understand the context of the whole chapter. All right. So in chapter 2, she also says something that I just want to read directly from the book. She says, one of the fundamentals of success in almost anything you do in life is that you need to spend relatively short amount of time planning for it. Even if things don't work out as planned, you at least have a goal and a path that you can get back to when you are thrown off course, right? So this speaks about, setting your goals. And I think this was an easy read for me. This chapter was really fascinating because I've done lots of videos on setting up goals as well as budgeting. So in the very same chapter, she speaks of the 7 steps that you can take to easily implement your budget. So she starts with the basics, something that we are all familiar with, and gets in depth with something that we are not so familiar with, right? My favorite chapter would be chapter 3. I have other favorites, but I'm just going to choose chapter 3 for now, because it speaks about something that I hadn't taken time to kind of, look into, and it's an important thing, right? So chapter 3 it's titled Clever in Your 30s and Relaxed in Your 60s. So this speaks about how the decisions that you make when you're young influence how you're going to retire, right? Most of the time we leave this retirement thing to when we are older. However, we realize that, we made a mistake, or we could have done better when it's already too late. So she opens this chapter by saying the statement from the National Treasury. She says, a mere 6% of South Africans will retire with enough money to enjoy the same standard of living they enjoyed while they were working. Really shocking. I don't know where the 94% is, but this is really a shocking statement for me, considering that, in South Africa, most of the retirement or pension fund are stipulated by the corporation in which you work for. I mean, I'm fortunate because where I work, you can actually choose how you want to save. I believe it's the same with a lot of people, but people don't take time to go there and kind of choose and see if that fits them, And she puts something which I like so much, which is called the multiplier. This multiplier shows you if you're on track on your retirement annuity investment plan, right, or pension fund investment plan. So it gives you the number of times that you need to have your annual salary, depending on the number of years that you have worked for, to afford at least 75% of the lifestyle that you had while you're still working. So if you have worked for 5 years, you need to have 1.2 times of your current annual salary for you to at least afford 75% of the lifestyle that you're having, right? Or you will have when you retire. So this table goes on to show you at 40, you need to have at least 15 times your annual salary for you to afford at least 75%. So, you can go to your pay slip and check if, if your working experience is 10 times, then you can see if you have at least 2.3 times of your current annual salary to see if you're really on track. And also in the same chapter, she goes on to describe the different annuities that we have. So different options that you can retire on, living annuity and the likes, level annuity, with profit annuity. So it's the way in which you want to use your money, or you want to be paid your money from an annuity as you retire. These are the kind of things that we leave for later, and most of the time we tend to be advised to choose the option that serves the person who is providing a service. So if we do not know, we just take it as it is, and then most of the time it turns out to not be something that works for us. So yeah, let's educate ourselves on that. And then we have a chapter number 4, which is Stock Market Your Friend. as I am an investor myself on the stock market and trying to explore it, I was very happy that she puts this inside in the book. So she mentions, how how companies actually raise capital through the shares, and how the different stock market in the different stock exchange came about. Yeah, and I think she just says something in page 62. Let me just quickly read it because I think this is important. The topic of this on shares is how to buy your first share. She says there are a multitude of options when investing on stock markets, and you don't have to know everything about it to start investing. Two of the most common options are unit trust and ETFs. Right, so she's emphasizing the fact that you don't have to know everything for you to start. I think the caption of her book says think big and start small, right? Yeah, so that's what she's saying, that you can just start small and try to familiarize yourself with shares, and then as you start familiarizing yourself, you can increase the amount in which you're investing. And she goes on to explain what unit trust and ETFs are. And another thing that she says is that you can access them through a stock broking account or a platform such as Easy Equity and ETF SA. And I've done a video here on YouTube talking about how to create an account on Easy Equity. So it's not that complex. You can do it as well. And for ETF SA, you can start on a minimal of 300 Rand, and on Easy Equity, you can start on a minimum amount of 100 Rand. So it's that affordable. And she goes on to mention some of the websites that you can use to read the news for you to stay in line and relevant to the shares, right? And then she goes on to talk about the different asset classes that are out there. And I like the scenario that she uses here, because she says she compares it to the ingredients of baking a cake. So she says if you understand the behavior of all these ingredients, then you will know which ingredient to use for you to get the output, the type of cake that you like, right? If you want to bake a chocolate cake, then you will know that you need this kind of oil, this kind of sugar, this kind of flour. Yes, has to be right. Yes, that's right. So with these ingredients, she's talking about asset classes. So if you know the risk and return profile of this investment classes, you're most likely to know how to build your investment portfolio. So she speaks about shares as well. She speaks about shares again and compare them to bonds. So bonds here is a new concept that is being introduced in chapter 5. So the two different ways in which company can raise funds or capital, it's through shares, issuing shares, or issuing bonds, right? So the difference is that for bonds, it's like you're borrowing a company money. So you give them money, you borrow them money, and most of the time you have one inflation linked interest rate back, or you can get a fixed interest rate back, right? That's for bond. For shares, however, they list their company and you get to buy shares, and as the company grows, you get the capital gain back, or you can get dividends back, right? And she just differentiates the two, and how the two works and how you can use them, which is really cool. I think this made me go and explore a little bit more on bonds, because I was not invested in bonds before. So they are government retail bonds, which gives a really high interest rate. You can go check them out. I'll also put the link below. I think it starts from 3 years, 5 and 10, if I'm not mistaken, and they give you fixed interest rate back. So it's a little bit safe, because you are sure that your interest, you will get it back, and your capital, you get it back. A little bit less riskier than shares, which it can grow and gain some capital gain, or it can lose the value, right? So she uses the story of Steve Jobs and Apple, and how Apple came about, to just differentiate the two between bond and shares. Yes. So also she mentions, while she was elaborating on shares, she mentioned that some people buy shares for capital growth, some buy shares for dividends payout. These goals are not mutually exclusive, but as you can imagine, when a company is still young, it will want to use the available cash to grow the business, whether it's through research and development, buying assets, employing bigger teams instead of paying dividends. So most of the smaller teams don't pay, smaller companies don't pay dividends. And yeah, normally companies actually start by paying debts, and then the money that is left over they pay, they put it for dividends payout, right? However, when a company is a dividend paying company, they most likely to want to keep that status of being a dividend paying company, and they would pay dividends before they can pay all their debts, right? So this is because some people invest simply for dividends, right? So if you cut out the dividends, they most likely to sell their shares, and then that means the price of a share will drop, and then they can go to another high yielding dividend paying share, right? So she speaks about IPO, and then in closure of talking about shares on this asset classes, she says, so if the higher returns is what you want, brace yourself for some bumpy road. And then she goes on to talk about commodity, and I like this chapter as well because no, I love this topic as well because also I didn't know. I mean, I'm a minor, but I should know, but I really didn't know how you can utilize investment in commodity. So she goes into detail on how to use it. And I think more importantly, or the highlight for me was you can use gold as your hedge fund, or as your hedge investment share, because as the global economy tends to have issues, the gold seem to flourish in that state. So you can balance out your investment or your investment portfolio with that kind of share, right? So you can buy gold, and you can buy mines, you can buy companies that mine gold. Although the relationship between the gold price and the company that own gold is it's not really directly proportional, but you can use that also to just hedge and balance your portfolio, right? So this was a nice read, to be honest. She speaks about other investment classes like property, and the fact that you can invest in property, not the physical one but the listed one. She speaks about private equity, and this was a relatable one for me because I think in 2019 World issued a private equity called Siakula, and I had a chance to invest on that one. So yeah, just to read about how it works. And I think the one thing that she highlights is that the advantage for this one is the fact that it's not so easy to liquidate it, because you have to wait a certain period of time for you to access your money. You can't just sell the share as well. Okay, and she speaks about wine and art, and she goes on to speak about cryptocurrencies. I mean, yeah, I you know what, I had a different feel about cryptocurrency, and I think here she just describes it in a way that is very, very understandable. Yeah. And then she speaks about tax-free account, which has, as the name says, a huge tax advantage. And I think everyone should have a tax-free account. And she speaks about how it works and the change of the rule since 2015 and 2018. And I think recently it was changed as well. But anyway, yeah, take advantage of tax-free accounts. And she speaks of who's who in the zoo in chapter 6, and that's just, she describes the bank, and she uses a concept of a zoo to show how their roles and responsibilities are in the financial world and how they actually function. So she says banks, the tortoise, because they move slow, and she is financial advisor, the giraffe, and the financial planner, and she speaks about the roles that they have in the financial world. And this just helps as well. If you use financial advisors, you know how they work, you know what their main goal are, and then you're most likely to use them rightfully as well if you know how they work, right? And know where to be cautious when they're advising you for certain things. So she covers a lot of these platforms that are out there. I know she spoke about Big Cats the trader, and how they work, right? And she goes on to elaborate on some of the concepts that are normally used in investment world, and what they mean. Something like dead cats bounce, um catch a falling knife, yeah. So then you can familiarize yourself with that language and know what they mean when people are talking about that. And she has a chapter called Make Your Money Work for You, which is the title of the book as well. And she just goes into details to explain how a different asset class can make money. So she goes on to talk about unit trust, and then she speaks about shares again, how pension fund works. And for pension fund, she's talking about how when you're younger, they invest for you on a riskier investments, and then they become less risky towards your retirement age, right? And yeah. And then there is the eighth wonder of the world, compound interest. This is one of my favorite as well. So she speaks about, like I said, how young people should take advantage of compound interest by investing when they're young, so that their interest can earn more interest. And then she speaks of the rule of 72, which is interesting. I didn't know about this before I read this book. So the rule of 72 speaks about how long it will take you to get to double your investment, right? So you can check it out. It's very interesting, in compound interest as well. And she talks about how it can be adjusted, in different conditions as well. Okay. And then she goes on to describe risks involved in investments. And you know what, a lot of times when we think about risk in investment, we're only thinking about a potential of money loss. And I think here she covers a lot: volatility risk, credit risk, interest rate risk, which is normally on bonds, because they're fixed interest rate. They give you fixed interest rate. So when interest rate increase, because your interest rate is already fixed, you loses a chance of a potential higher interest rate. That liquidity risk, inflation risk. And one of the risks that she mentions, it's related to the bank, that in as much as the bank do assess us and give us a certain interest rate, they are also assessed, and they're given a certain percentage of interest rate. So she mentions that most of the time when a bank gives a higher interest rate on the money of investment, it's because they're trying to attract more people, because they're a little bit risky. So they're trying to attract a lot more people to come to them, right? Because maybe on the assessment they they're a little bit risky. Yep. And then she speaks about designing your portfolio. And I like this chapter because it has a risk assessment table, which you can take, the assessment yourself and get the scores and get to see the type of investor that you are, if you're a conservative investor or cautious investor or moderate or aggressive investor. So also she goes into details and explain, if you're a moderate or an aggressive investor, what kind of investment can you look into for you to get the return in which you want. So yeah, she goes into detail explaining what that means. And then we have chapter 11, where she speaks about the rise of robo-advisor. the use of technology to make sure that you can get advices on your investment. Yeah, so yeah, I have this one. No, it's not the Outvest. I think I used the Old Mutual one myself. You get to see your financial portfolio all together. So you provide them with your financial information, and they tell you, where you are, how you spend, those kind of information. And then in chapter 12, she speaks about how to avoid fraud and investment scams. You know what? Hey, guys, a lot of times when those things happen, we know they're scams, right? So she speaks on how the pyramid scheme started, and how it's still ongoing. So she speaks about Ponzi, triple M's, and the likes. Yeah, so I think what she's emphasizing here is that the people who create this, they know that we all want higher return, and they are normally not even shy to come and give you ridiculously high interest that that not even shares can give you. They'll tell you get 30% return, and it normally looks too good to be true for everyone, but people still yet go for it and they lose their money, unfortunately. Some do not know, but some go there knowingly. Yeah, so I think we should just start investing in the right kind of channels and platforms so that our risks are calculated. And then she has this last chapter, which is called Putting the Whole Picture Together, and where she just goes through everything that she spoke about in the book on how you can just go about it. So it's a very, very short chapter. Speaks about the starting point, getting rid of unnecessary debts, to use everything that she has spoken about in the book to kind of make it reality for you, right? I think I love this book. Generally, I do love it. I think she managed to go in depth yet using a simplified language. For it's very, very understandable. It's an easy read, maybe because I love finance as well. And I think, what, one of my favorite line that she used to encourage people to start investing was talking about the effect of inflation on money. Most of the time we just keep our money around without checking how much interest it will get, right? So if you buy a lamp 400 rand, this is the example she used. If you buy a lamp 400 rand today, and then the inflation is, let's say, 5%, next year that lamp is most likely to be 105, right? So if you didn't put your money away, that 100 rand away in an interest bearing investment, for it to gain interest that is 5% and above, you're most likely to not going to afford that lamp because your money would have lost value, right? So it's something that we need to be cautious of, if our interest rates will beat the inflation or if it will just be equal to inflation as well, at least to keep our money relevant to the economy, right? So good read. And I have checked this book's price. It's less than 250. I don't remember how much it was exactly, so you can go buy it and check it out. It's there's vast